Welcome back. You're watching Editors Roundtable. As promised, we've got Mihir Vora with us, CIO of Max Life Insurance. Mihir, great to see you. First, what happened this week, right? What explains this kind of sell-off that we have?
I think it's just one of those days where, or weeks where we are reacting, probably overreacting to global events. Okay. People are saying COVID and all those kind of reasons, but last couple of days, China is actually up, where COVID is supposed to be spreading. So maybe a bit of year-end lack of buying from FIIs. Coupled with people squaring off their books, that's what it looks like.
So no reason for the markets to sell off from here on?
Well, if you see from the global perspective, I would, if I was a FII, if I was overweight India, then I actually done pretty well, you know. And towards the end of the, if I were a hedge fund, towards the end of the year, I'm going on vacation on 24th. I probably want to square off my books and cut some overweight in India. That's what's probably happening. S&P is down 20% for the year in the US, while we are still flat. So there is some money, to be taken off as far as profit booking is concerned.
Mihir, are you getting a sense that the retail investors are now panicking? Because, this week fall largely explains non-institutional activity picking up, and that's the reason for a sharper fall. I know, the SIP money is very sticky, the EPFO money is quite sticky, but the direct investment money which retail investors are putting in, are you getting a sense that that's now getting questioned and that's now getting withdrawn as well?
Maybe a bit of that, because if you see the sharpest fall has not even been in the mid-cap index. Yeah. It's been in the small-cap index. Right. While the Nifty is, say, plus 2% this year, the small-cap index is minus 20. So a little bit of capitulation maybe there in some of the counters. Also, it's kind of natural that in a rising interest rate scenario, the smaller companies tend to get hit more. Right. And that's probably one of the reasons why we've seen in the last 2-3 months small caps not performing, because cost of funds for them actually is very sensitive.
Right.
Actually, 2022 has been an extraordinary year, right? It's a very abnormal year because we took it because the market outperformed so much, ignoring what is happening to the rest of the world, and it happened over and over and over again. It never fell, right? It fell one, and then there was a sharp recovery.
Even more versus the other markets.
Correct.
Absolutely.
So we took it to be normal. I mean, this is the way the market is always going to be. Maybe that kind of changes a little bit as we head into the next year, 23.
I mean, I wouldn't make that conclusion just on the basis of the fact that we've fallen from 18,800 to 17,900, because just 3 months ago we'd seen a similar kind of move. So these 6%, 7% moves are not to be taken too seriously.
You're not used to it. 6%
moves. Well, at the cost of being beaten up on this kind of a day, it's a healthy correction, I would say. But you never know, yeah.
IT bull or bear?
IT, I'm negative because I'm more...
But buy into the weakness?
No, I would rather buy into the domestic stocks which have fallen more. Some of the financials have fallen quite a lot in the last couple of months. So I'm more bullish on the domestic recovery thing.
So, exactly. Within financials, will you look at PSU banks after the fall?
PSU banks, again, for me, is more of a tactical play. Okay. If it's a 3 to 5 year buy and hold call, I would still stick to the private sector banks. But yes, those valuation gaps sometimes tend to get extreme. So when the private sector banking space, if it's done 100% and the PSU banks have gone up only by 20%, then you will see 20-40% move in that space too, just for the valuation part.
Bajaj Finance have presented some data that interests you?
Can't comment on specific stocks, but in general, I would still go for private sector banks versus NBFCs given the funding costs.
Okay. The last time we spoke, you kind of sounded that you are exploring new age tech companies.
Yes.
Has anything changed? Have you bought anything?
I think in the last couple of months, things have become even more attractive and we are nibbling into the space.
You've started buying?
Yes.
Anything else, Mihir, apart from financials, new age?
See, my hope and fervent wish is that industrials do well. Because unless the industrials, investments, capex cycle picks up, we won't go to 7%, 7.5% GDP growth rate. That has to pick up, including real estate. Right. And valuations are still very attractive in this segment. So with a little bit of trigger, you can see huge outperformance in the capex, industrials, engineering, construction, those kind of things.
One last word, defense. I think that was a space you were interested in. You were optimistic, bullish. Stocks have doubled, right?
But it has corrected sharply now in the last 1 week.
Yes.
So the stocks are down 15-20%.
Yes, but that's, I think, a secular story which has just started in the last couple of years that can last for many years.
Right. So it's basically a buying opportunity
I would think
level.
So, yes.
Thank you so much for dropping by, Mihir. And we find that we hope that you find easier traffic on your way out than on the way in. Mihir was supposed to be with us earlier at the start of the show.
But this seemed like a rapid fire, right, with him? But thank you very much, Mihir, for packing in a punch. And season's greetings to you,
You too.
Your family and everyone
Absolutely.
at Max Life
Have
Insurance.
a great 2023. Happy investing.
Happy. Well, with that, it's a wrap in this edition of Editors Roundtable. Hope you enjoyed it. Thank you once again.